Welcome guys, this is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe to this channel. Turn on the notification bell to get notified when we upload our weekly content, okay? And if you are looking to learn smart money concepts and you are new to this strategy, we have so many contents in this channel that is going to help you in your journey, okay? So do well to check out our previous videos and you'll find them really helpful. Okay, so in today's episode I'm going to be looking at something I wanted to share with us. Okay, so I called it smart money exit strategy. Okay, in other words, take profits. How do we take our profits? You know, one thing is to have a good entry and the other is to have a planned exit. Okay, so I repeat that. One thing in smart money trading or in trading in general is to have a good entry. Okay, one thing is to have a good entry and the other is to have a planned entry. Okay, so as you are getting in, you have to plan your exit. You have to be sure of the level you want price to go to reach for, not to get at. Okay, then something spectacular happened today, and pick up an experience from it, and I wanted to share it with us. Okay, so what happens when you place a trade? Okay, what happens when you place a trade and your expectations were okay, you set a TP for a particular level and suddenly the market turned on you. Okay, the market turned on you and you ended up giving back everything you have made from the market. Okay, and ended up taking a break even trade without having that's taking anything out of the market. Okay, so this video is going to address that. It's going to talk a little bit about some helpful tip, okay, that you can use to to in other words to make to get something out of the marketplace in those kind of situations. Okay, so something similar happened today, and I wanted to share it with us. Okay, so with that said, let's get down to business. Let's get down to the business. Okay, so now this is the Australia dollar. Okay, this is the Australia dollar, and we have sorry. Okay, this is the Australia dollar. Okay, so now this is the 1 hour time frame. Okay, and our buyers on the dollar, as the dollar has been bearish. Okay, our buyers has been bearish prior to this week. Buyers has been bearish, right? Notice we have this daily OB. Okay, this daily order block, the price has just reacted off in the mean threshold. Okay, when we refine that the daily order block to 1 hour time frame, this is the 1 hour time frame. I measured that the range of this last up close candle or down close candle. Okay, sorry, the last set of up close candle right here before the down move. Okay, I measured the bodies. Okay, the bodies of these two up close candle right here. Okay, and that gave me the mean threshold, and as you can see, price reacted off the mean threshold, right, and dropped aggressively. Okay, so now this week has been really not what I've been expecting. Okay, this week has really been off my expectation. Okay, and probably that's due to the previous week NFP that was shift. Okay, I'm thinking that's probably because of the NFP, because NFP ought to to be released every first Friday of the month, and it was shifted to this week's Friday, which is probably tomorrow. And I think that mess up the market in a way. Okay, so the expectations were really not what it turned out to be. Okay, what I was expecting the market to pan out this week was not really what it did. Okay, so with that said, let's go down, let's go through. Okay, so now notice we have this current range, right? We have this range right here. We have this range from this high to this low, right? When we measure that out from the high to the low, okay, remember we are bearish, right? So when we take our fib, we measure it from the high, we project it from the high to the low, right? So now that above that will be premium. Okay, and at the same time we have this fair value gap that overlapped the equilibrium. Okay, so now we're going to look into this segment of price action right here. Okay, we're going to look into that, which is today's price action. So I'm going to look into today's price action. Okay, and of course, as you know it, this is my New York midnight opening price. Okay, this is my New York midnight delineation. Okay, so I'm using these two trade lines right here above the candles that open up the New York midnight. Okay, so now drawing that out in time will give us the New York midnight opening candle. Okay, so now my bias is bearish, of course. Okay, and I was expecting some run on liquidity, as we all know it, above the opening price of the New York midnight. Okay, so now let's go down, and now I'm zooming in uh a little bit more. Okay, we have these equal highs, right? We have this relatively equal highs. Then this is my New York midnight opening. Okay, then we have that run on buy side liquidity, as I was expecting it. We had this run on buy side liquidity, and when this occurred, okay, I was observing for a shift in market structure. Okay, though I did not include the Q zones up here, but this happened, I'm sure, during the New York Q zone. Okay, then we had the market run buy side liquidity right here. Okay, then created a short-term high, and it had a run one more time, just like I always want to see. Okay, because whenever price runs uh any runs liquidity, either buy side or sell side, depending on your buyers, what I always want to see, and what I always made mention, is that I always want to see price make an attempt towards that old high. Okay, in other words, I always like to see price make an attempt towards this old short-term high right. Okay, see that to make an attempt to run it one more time, or act as a failure swing. Okay, in this case we had a run on liquidity, we had a run on that high one more time. Okay, then we have our shift in market structure. Okay, this is our shift in market structure, which is what I'm expecting. Okay, we had these candles higher low, lower low to in the middle, and the candles low, higher low to the right side, so forming a swing low, right? So this short-term low broke this high, had the run on buy side liquidity. Okay, so I was anticipating a shift in market structure from this short-term low right here. Okay, so, and as you can see, we had price broke structure to the downside. So this is my shift in market structure, and we had this fair value gap. Okay, so now this is the fair value gap as the 2022 model taught it. Okay, so like we were taught in the 2020 model ICT mentorship. Okay, if you are bearish, you want to see an old high, run on, you want to see a run on buy side liquidity, right? So you want to be selling at premium, and remember, every time we go above a short-term high, that is short-term premium, right? And at the same time, we are in the premium sector of the whole range, which is, this is that midpoint, okay, from the 1 hour time frame, and we are above it. Okay, so now we are seeing a run on buy side liquidity, and it makes a run on buy side liquidity one more time. Okay, then we have this shift in market structure right here, and a fair value gap. Okay, so now, although the short-term low that was formed here is not really clear on the 15 minutes, but if you go down to the 5 minutes, which we are going to in a moment, you're going to see it clearer. Okay, you're going to see the clearer picture of it. Okay, so let's go down to the 5-minute chart. Now we have the 5-minute chart right here. Okay, so as you can see, we have that old short-term high. Okay, price started to retrace. Okay, like I made mention earlier, I always want to see price make an attempt towards this old high one more time. Okay, I want to see price run towards this old high one more time, either to run buy side liquidity one more time as a stop hunt, or a failure swing and a shift in market structure. Okay, so obviously we had a run on liquidity, a run on buy side liquidity. Okay, and we had this shift in market structure. Okay, then we had that 15-minute fair value gap. Okay, so I got my entry right in there. Okay, so I got my entry right in there. My stop loss was above this candle. Okay, so now this is the time I took my entry. Okay, so this is like before and after analysis. Okay, so took I took the screenshot of the time I was taking the entry, so that's why I'm just using it for the purpose of this video. Okay, as you can see, none other price actions had happened. Okay, none other price actions to the right side had happened. Okay, this was the current market, this was the current market's price action data. Okay, at the time of taking this trade. Okay, so although I didn't mark out the 15-minute fair value gap, I was taking the entry on, but it was right there, as you can see. 15-minute chart, as you can see right here. Okay, so this is that fair value gap, and transposing it to the lower time frame is going to be between this high and this candle's low. Okay, so although it's overlapped on the 5 minutes, but it's still there, right? So we had this on that, and I took my entry right there. My stop was above this candle's high. Okay, so now this is where it gets, this is the main major thing I want the takeaway from this lesson that I wanted to share with us. Okay, so this is it. So as you can see, I had my entry. Okay, I had my shift in market structure, right, and I had a return to fair value gap, which is between this high and this low. Okay, and I got my entry, and at the same time we had this other block, right? We had this last set of up close candle before the down move, measured that out, and we have our mean threshold, right? This is our mean threshold of the other block, right? So now we had our shift in market structure, price return to fair value gap, and I sold off right there. Okay, so now the strategy I want to discuss with us is that, and where is my my initial idea. Like, the plan was that I was going to hold this trade, and my take profit was going to be below this low. Okay, because this is the opening price midnight, right? So it will make perfect sense for me to take my exit below these candles, below this relatively equal lows, right? So but something else got my attention. Okay, something else got my attention. This is I am currently in a dealing range, right? This is a dealing range that I am trading in currently, right? So we had this low to this high. Okay, so now from this low to this high, this will be viewed as external range liquidity. Okay, my exit will be viewed as external range liquidity. Then from this low to this high, this short-term low right here, these lows right here will be viewed as internal range liquidity. Okay, so the idea was that my attention was caught on to this fair value gap. Okay, this fair value gap caught my attention. Okay, this could be a potential exit for me. Okay, so I was looking at this fair value gap. I was, kind of cautioned on this fair value gap. Okay, so I could have used this. If you have, like, I've gotten in right here, okay, this could be a potential exit for me. Okay, and this could be my overall TP. Okay, so the idea is that whenever we have an entry, you should look at that current dealing range that you are in. Okay, because of course you are always in within a dealing range. Okay, so notice I had my entry up here. Okay, so now prior to this, we had this high down to this. If you have to look at the origin, always look at the origin of the dealing range you are in. Okay, so this is the dealing range I'm in, right? This is the high, so you have to look back and look at where the origin comes from. Okay, so this is the low, right? So the idea is to look within this dealing range. Okay, the idea is to look within this dealing range and look at the concept of premium to discount, right? So if I'm selling at discount at premium right now, okay, so I'm selling at premium right now, the premium side of my dealing range. Okay, although I have the daily range, but that's different. Okay, so the daily range is going to be my target for as a day trader is this lows, right? Is this lows, because I was really expecting price to expand to this lows. Okay, but in the concept of looking at my dealing range, okay, so that's the two different things right now. Okay, so we had my overall dealing range as a day trader, right, and I have the current dealing range that I am trading in right now. Okay, so the overall idea was to hold down to this lows. Okay, but the daily range that I'm in right now, okay, price could just literally retrace back down into discount and continue going up. Okay, so that was what sparked my attention, that was what got my attention, and I was looking at this fair value gap. You can see I marked it out prior to the video making. Okay, prior to the time of making this video. It's not like I marked it when I made the video. Okay, I marked it before the time of making this video to actually tell you guys that my attention was on this fair value gap. Okay, so let's look at how that looks. Okay, so this is after it had happened. Okay, but I had already marked it out previously. Okay, so now looking at this range from this low to this high, this is my dealing range, current dealing range that I'm in, right? So now my attention was on this because I had the intention of holding for this, but price can decide to do what it knows how to do best, which is exactly what it did, turn on you. Okay, so I was hoping for this daily range, but price, as you can see, traded into that fair value gap, expanded a bit, a lower a bit, and retraced on me. Okay, so what I actually did was that after I got in right here, when price traded into this fair value gap, I took out about 70% of my entry. Okay, and I trade my stop loss to a break even. Okay, so now I was hoping to get a second entry right here, this fair value gap, because we had a shift in a break of structure. Okay, we had a break of structure. Sorry, let's go up. I think this is it. Okay, as you can see, I marked that as I marked this level right here as a break of structure. Okay, so I was looking at this as an exit. Okay, so if you can get an entry right here and aim for an internal range liquidity like I did, okay, this right here, guys, is more than enough. You can just take this and you are done. Okay, and if you want to hold for this external range liquidity, the idea is to make sure you take at least 50% of your entry of your total lot size off. Okay, so 50% of your entry should be taken out, 50% of your position should be closed off. Okay, just like I did. So the idea was that I took off about 70% of my positions right here at this fair value gap, and I was hoping to get in if it comes back to this fair value gap that it was creating. Okay, as at the time it has not, it has not created the fair value gap, but that was my initial plan. That was why I marked out this break of structure. Okay, so as you can see, price indeed in fact, although it trade into it a little bit, it was not much. Okay, trade into it a little bit and dropped off. Okay, but I was waiting for a much more like and a move into it. I didn't took an entry. I didn't take an entry on this little movement in, but I should have. Okay, I guess I should have taken an entry right there, because my entry, my limits should have been above this candles high. Okay, so but I took an entry right here, although it traded off, it reacted off a little bit, but I got stopped at eventually. Okay, I got stopped at and I took a loss right there. Okay, but the idea and the takeaway of what I was trying to share with us, that for your exit should be planned. Okay, so the plan was getting it at premium. Okay, I was considering the overall premium of of the daily range. Okay, and I was considering the current daily range the current daily range that I was trading in. Okay, that I'm currently trading in, so which is this high to this low. Okay, so I took off most of my positions right here, and I head on to the minimum for the external range liquidity. Okay, so always make sure you do this. Okay, so this is something that is going to help you to prevent this kind of scenarios. Okay, when eventually you had a idea of the trade reaching for this low, right, and you probably traded off, you probably trade your stop loss to a break even, but you didn't take out your some positions, or in other words, what level do I take out partials? Okay, where can I take out partials? Where can I start taking partials from? Okay, so this is how you can do it as well. Okay, just measure the current dealing range that you are in. Okay, if you are selling and you probably sold at premium, you can just wait for price to get to the midpoint of that dealing range that you are currently trading in. Okay, you can take off 50% or whatever percent that you like, of your choice, and probably as price reach down into premium further, into discount further, in this case, since we are bearish, into discount further, you can be scaling off more positions. Okay, so the idea was for me to, if price comes back into this fair value gap, was to re-enter with the positions that I have closed on earlier. Okay, which is exactly what I did when price came back, and I took the loss, but I was still in profit because this covered the loss and I was still in profit. Okay, so as you can see, this is, I took my entry there, stop above that old high. Okay, so that is just the content of this. That's just all I wanted to share with us. Okay, so the idea is, if you are short or you are long, always pay attention to the dealing range you are for your TP. Okay, your exit have to be planned, just like your exit or your entry. Your entry and your exits are very vital. So you have learned one or two things from this channel, please do well to subscribe, turn on the notification bell to get notified, and remember our Telegram group is always open. Okay, that is where I share most of my analysis. With this community on via the Telegram group. Okay, if you want to reach out to me personally and you have any issue, you have queries you want me to answer, you can join the Telegram group. The link is always attached to the description box. Okay, so it's free and you are welcome to join anytime. Okay, so tomorrow is NFP and I do wish everyone out there a good luck and good trading. See you guys in the next video.